Good morning, grade nines. I'm just quickly going to do a general ledger, just as revision for your exam. So it says here that we need to open the following accounts in the general ledger. So this means that we have to take the balances that have been provided. Let me just quickly move this thing away. There we go. We need to take the balances at the beginning of the year, and then we have to open the account. So in other words, show that we had the following balances on the first day. So let me just quickly change this because the year is December, not October. There we go. So on the 1st of December, 2024, because we are doing the ledgers for the month ended 31 December 2024. So opening the accounts, taking the opening balances and posting those to the ledgers. So I'm going to start with that. So taking the information step by step. Right. Please remember to study when accounts have balances on the debit side and when they have their balances on the credit side. So we know that all assets, all expenses, and then drawings have their balances on the debit side. And then all income accounts, capital, and liabilities have their balances and totals on the credit side. So the first one, there's equipment. We weren't asked to do the equipment account, so we are just going to ignore that piece of information. Then next up is bank. We have to do bank, so we're going to go to the bank account. I'm going to say this is 2024, December the 1st. We have a balance brought down from the previous month. So opening balances brought down, 20,700. Then we move on. We also have to do the debtors control account. I'm just going to add a 0 there. I think I made a typo. I don't think I was planning on doing 1,200. Okay, so debtors control, 2024, December the 1st, we had a balance brought down, 12,000. Next up, trading stock. We also have to do that account. So 2024, December the 1st, balance brought down, 55,500. Right, next up, loan. We don't have to do a loan account, so we are just going to ignore that one. And then we have creditors control. Remember, creditors control is a liability, therefore the balance is on the credit side. 2024, December the 1st, balance brought down, 12,850. Then sales, we also have to do the sales account. These are now sales and cost of sales. These are all nominal accounts, so income and expense accounts. Therefore, they do not have balances, they have totals. Sales is an income account, so on the credit side, December the 1st, total brought down 1 million. Right, and then cost of sales and expense, therefore debit side, December the 1st, total brought down 500. And then wages, we don't have to do the wages one, so we are going to ignore that one as well. Right, so the first instruction was open, and then it said post the journal summaries or the journal totals. So that means that we now have to, my apologies, we now have to go to the journals. So we've used the ledgers, the opening ones, and here summaries of cash. I should have added here cash and credit journals because we have all of them here. So summaries of cash and credit journals. First of all, we have the CRJ, then we have the CPJ, DJ, and CJ. So it's extremely important to understand what happens within each one of these journals. So the CRJ is whenever we receive money, right? So bank over here is how much you received in total. When you look at the different columns, you're going to see what you received the amounts for. Then in the CPJ, in the bank column, is everything that you've paid in this month. And then you look at the columns following bank to see what it is that you paid. In the DJ, your debtors journal, it is all the sales that you haven't yet received the money for. So in other words, credit sales made to debtors. And then in the CJ, it's all of the items that you purchased without paying. So creditors control is the total that you purchased. And then here you will see what it is that you purchased specifically. Okay, right. So it's easier if you're still struggling with this a bit. It's easy to first study the templates of each one of these accounts, because in grade 9, it basically remains the same for each one of the exercises. In grade 10 onwards, this will not work, so please don't think that this is the go-to. But for now, bank. Bank is one of those accounts, like, it will never change, apart from the fact that in your FET phase, it could be that you have a bank overdraft. But for now, always going to have total receipts as per the CRJ, and you're going to have your total payments on the credit side. Because remember, you're working with an asset account here. So your asset increases on the debit side. So in other words, whenever you receive money, your bank account is increasing. Whenever you are paying, your bank account is decreasing. Then debtors control. So once again, an asset. So every time that your debtors purchase from you without paying you, they owe you more money, so your debtors increase. So your debtors control, you wait until the last day to see how much they purchased from you, so how much you had in sales, as recorded in the DJ, that you haven't yet received. Then whenever these debtors make payment to you, they owe you less money. So this asset is now decreasing because they don't have the outstanding accounts anymore. So you're going to decrease this account. And yet again, you have to wait until the last day to see in total how much they paid you. So you received money, therefore bank. You received it, CRJ. Right? Then trading stock. Trading stock, you're either going to buy more, so you are going to increase this account, or you are going to sell your trading stock, because remember, it's the stock that you are trading with. So you are buying this, accumulating this asset in order to sell it at a profit. So when you sell it, purchase it, you're either going to purchase using cash, CPJ, because you paid for it, or you are going to opt for a credit purchase, creditors control, and that's going to be recorded in the CJ. Right. Then whenever you sell your trading stock, that becomes a cost of sales expense. In other words, the cost you had to incur in order for the sale to take place. So you no longer have the trading stock because you either sold it for cash and you received the money, or it was a credit. Yes. What am I doing? My gosh. You sold it for cash. So it is a CRJ because you received the cash, or the trading stock becomes a cost of sales because of a credit sale. That's what happens when you type, explain, and everything all at once. Okay, so trading stock, you either purchase it using your cash, so you pay for it, or using credit, so creditors control. Then whenever you sell your trading stock, your trading stock is considered the cost, so the expense that you had to incur in order to make the sale. And you're either going to sell the stock and receive the money, or it's going to be a credit sale in the DJ. Right. Next up, creditors control. So you owed them at the beginning of the month. Then you also decided to purchase more from them, but you purchased a whole bunch of stuff during this month. So we are going to group them all together as sundry purchases. And that is recorded in your CJ. So that is that creditors control column that you see in your CJ. Then you might also decide to be a very good business person and make payment to them. So on the last day, how much did I pay them from my bank account as recorded in my CPJ? Right. Next up, sales. So once again, you're either going to sell your goods for cash as recorded in the CJ, or you are going to do so on credit, so debtors control. Cost of sales, same thing. Let me just add another row here. There we go. Same thing. You are either going to do it cash or credit. But now you must remember that it's your cost of sales is the trading stock that's leaving your business. So in trading stock, your contra account is cost of sales. In cost of sales, your contra account is trading stock. And it has to be the same amounts because remember, you're tracking that movement. Where's my trading stock going? It left my business in the form of a cost of sales expense. So trading stock, DJ. And that is the only one that we had to do. Righto. So now we can go to our information and literally just populate that information in our ledgers. In other words, post them. But then you see the first amount that you have to work with has a question mark. We're not going to freak out. We know that bank in the CRJ means everything that we received. So we received sales of 320,000. Then we have this cost of sales expense here. Remember, you didn't receive this amount. This is just you following the movement of your stock from sales. So you're not going to add this amount. Next up, debtors control. So you received money from your debtors and you also received some random amounts there. So the total that you received for this month is 347,000. Okay. Then in the trading stock column here, you also have a question mark. So in the CPJ, remember, bank is the total that you paid for all of the columns that follow bank. So in other words, if your total payments added up to 305,400, you could just minus the amounts that you do have to find the missing figure here so that all of this adds up to bank again. So 271,400. 400. Okay, DJ is fine, no question marks. CJ, again, a question mark. But remember that everything after the creditors control column has to add up to the amount that you have in the creditors control column. Said there that sundry accounts is 0. The only other column we have is trading stock. Therefore, creditors control is equal to trading stock. Righto, now let's go. In the CRJ, we're starting off with bank. So the bank column means the total receipts for this month. So I go to bank and I say the bank is increasing because of total receipts 347. Right? Then why did I receive the money? Because of sales. So I go to sales and I say that I received money as recorded in the CRJ, 320,000. Okay, I know that I cannot have sales without trading stock leaving my business in the form of a cost of sales expense. So I go to trading stock and I say that I now have less trading stock due to cash sales. And I go to cost of sales and I say that this expense is now more because, oh gosh, let me just fix this typo. This expense is now more because of the trading stock that I sold. Then debtors control in the CRJ means that I received money from my debtors, so they now owe me less. So I go to debtors control, I indicate that it is now decreasing because I received money as recorded in the CRJ, 12,000. Next up, we have sundry accounts. If I want you to post anything from the sundry accounts, I have to give you the details within that account. So I'm going to have to tell you, for instance, you received rent of 8,000 or 10,000, whatever. Then you can post that to your ledgers. But we cannot post sundry accounts to ledgers because there's no account sundry accounts that we are working with. So that's just a group of accounts that we throw together. So we are going to ignore that information because they didn't give us the details. Then CPJ. So in the CPJ, we now made payments. So we had to wait until the last day to see how much we paid out of our bank. So our bank is now decreasing with the total payments as recorded in the CPJ, 305,400. Right. Then what did we purchase and pay? We purchased trading stock. So we go to trading stock. We purchase this cash, 271,400. We also paid for wages, but we don't have to do the wages account, so we're going to ignore that. And then we paid our creditors. we do have to do the creditors control. So we now owe this creditor less money because we paid 14,000 Rand. Okay, next up, the DJ. DJ means that our debtors now owe us more money because they purchased from us. And that means that we had sales. So we also had trading stock that left the business in the form of a cost of sales expense. So DJ, debtors control, they now owe you the full amount that they purchased from you. So the full invoice amount, right? Which means that you now have more sales because you sold goods on credit. So there, sales increasing. It also means that you have more cost of sales because of the credit sales that took place. So you no longer have that trading stock. So we go to trading stock and we decrease our trading stock. See, it's literally just a story that you are telling. Okay. Next up, the CJ. So we purchase from our creditors without paying them. So we owe our creditors more. So we increase that creditors control. And then we owe them because of trading stock that we purchased. So we go to the trading stock account. There we go. We owe them more because of more stock that we purchased. Okay, and that's all the information we have used it. Then the last point there, so that last sentence says that we must balance/calculate the totals of the accounts. In other words, balance our balance sheet section accounts and total our nominal accounts. Right, so let's get going. Starting with bank. So the easiest way to balance accounts, add everything on the debit side, get the total. Then add everything on the credit side, see which side is the bigger one. So on the debit side, you currently have 367. That is more than your credit side. So you're going to write this total on both sides. Just want to move this in like that. There we go. So there goes my 367, 700. Now you can see everything. Righto. Then I'm going to write it on the credit side as well because it says that I have to balance the accounts. In other words, I have to make debit side and credit side equal. Now, when I look at the credit side, I'm lying when I'm saying that it totals up to 367. So I now need to make it total up to 367. So I'm going to take that total and I'm going to minus the amount that I currently have on the credit side. And I'm going to write that difference in there. Now it is equal. So that difference over here is my new balance. It's my balance carried down and my balance brought down in January 2025. Balance brought down 62,300. So what this means is that we started with an amount in our bank account on the 1st of December. By the end of December, we received in total that amount. And by the end of December, we have paid an amount. So we are left with 62,300 at the end of December. We're not going to throw that money away. We're going to use it in January. Okay, right. Next up, we have our debtors control account. So we're going to do the exact same thing. Add everything on the debit side and credit side, see which side is the bigger one. Clear to see that debit side over here is the bigger one. Then make the credit side equal to that total that you say that you have there. It's your 80,000. So 80, and that is your balance. So in other words, at the end of December, your creditors owe you a whopping 80,000 Rand. So you would hope to get payment from your debtors in January because that's a lot of money that they owe you. Okay, righto. Same with trading stock. Still, debit side is the bigger one, so I'm going to add everything. Ooh, there we go. So write the total there. And on the other side, so both sides get the same total. Subtract everything on the smaller side. Find that difference. Write the difference in on the smaller side. And that is your balance. carried down that you're bringing down in January. So in other words, this is a trading stock that you haven't yet sold that you can now sell in January. Okay, next up, creditors control. So now the credit side is the bigger one. So we write that total on both sides, 77,650, and we subtract the smaller side. And we write that difference in there to make it equal. And this is our balance. Balance carry down and brought down on the first day of the next month. I'm still going to August. Wow. I think I just did an exercise where August was that one. So balance brought down 63,650. So in other words, we haven't yet paid our creditors 63,650 Rand. It's a lot that we still owe them. So hopefully we'll pay them in Jan. Now for sales and cost of sales, those are your nominal accounts. So we're only going to total them. So we're not going to draw double lines. Can you see? I only have one line there. No double lines for our nominal accounts. Plus 320. I don't know why I'm using the calculator. So 1.4. Just adding the total. Same for cost of sales, so 500. Plus 175 plus 49, 427. See, here I have to remove my double line. I shall do that now. 2650. Let me just quickly do this so that you don't get confused. There, no double lines. Okay, that is general ledgers, you guys. Nothing strange, actually rather easy. Happy studying.